Hello everyone, welcome to Just Invest Today, and today we are talking about Alibaba. Was Charlie Munger right purchasing Alibaba? Should you still buy more? Do you think his decision was correct? And let's get into it because a lot of people are still clowning Charlie Munger, saying he made the wrong decision. He's bad for investing in Alibaba, blah blah blah. They're saying all of that good stuff. So let's get into it. And please guys, can you like this video, subscribe to my channel, click the subscribe button down below, man. I'm gonna be providing you guys with so much new content all the time. So please like and subscribe. Thank you guys. Remember, Charlie Munger bought Alibaba in Q1 2021. That was his first purchase. And it was a huge buy. It sent shockwaves all throughout the stock market. People went crazy making videos about it, and rightfully so, because remember, Charlie Munger does not make purchases frequently. Like, he barely touches his portfolio. So that changed 19% of his portfolio. He bought 165,000 shares. And then in Q3 2021, he added way more. He upped it 82%, man. So he made it at least a 20% holding in his portfolio. And remember, Charlie Munger does not make many bets. So we're going to get into it, see if he made the right decision, the wrong decision. And we have to put this in his philosophy, how he thinks about this purchase, because we're going to get into some quotes as well, right? So he bought into Alibaba. Remember, it was Q1 2021. So that's around January to around March. So we have January until March. So like, look at this. He could have bought it at 258. He could have bought it at like 237, 224, 220. Like, so around March, April-ish, that's when he probably bought it. So I'm going to give him around 230, 220. At least into that range, man. I'm going to give him 220, right? So let's say he bought it at around 230, 220. And then the next time he doubled down, he added a lot more, was Q3. And we know that Q3 is from around July to September. So when do you think he added again? He added again probably around 195, probably around 157, 140 maybe. If he bottom ticked it, which I highly doubt, he bottom ticked it at 145, doubt it. He probably got it a 170, 180 around that mark. So I'm gonna guess his cost basis is around 200, maybe a little bit lower. But yeah, that's still a cheap price for Alibaba. That price right there is actually literally perfect for Charlie if you actually understand his philosophy and how he invests. And we're gonna get into that. But I honestly think that maybe we could see another purchase of Alibaba. Would that surprise you if he doubled down again with Alibaba? Since he's already so convinced that Alibaba is at a cheap price around 200, 180. Why wouldn't he invest more at 140? Because that's how he thinks. That's how he invests. So let's get into some Charlie Munger quotes. So Munger's investment strategy is very boring, keeping a cool head and investing in high quality businesses with long histories of rewarding shareholders may not be exciting, but will generate solid returns over time with less risk than investing in the next big thing. Munger seeks opportunities that is attractive when adjusted for risk. In other words, he's looking for mispriced gambles. You're looking for a mispriced gamble. That's what investing is. And you have to know enough to know whether the gamble is mispriced. That is value investing. That's value investing 101. We know that Charlie sees an amazing price for Alibaba because he already bought it at around 200, 220 initially, and it's selling at 140. So we know 140 is severely undervalued. And if you bought it at 220, he thinks it's probably going up to 300, 400. So you know this is a mispriced gamble 101. And he sees this as not a mispriced gamble plus a good risk to reward ratio. The opportunities for Munger looks for great businesses trading at a discount to fair value. A great business at a fair price is superior to a fair business at a great price. Alibaba is the most dominant company in the market in China right now, and it's still going to succeed as long as the Chinese economy grows. Taobao and Tmall are still the most dominant companies, especially in the e-commerce sphere, and we understand that the Chinese e-commerce market is still growing. Once an investor finds a great business, it's important to be willing to give it time. To Charlie Munger, patience is virtue. The big money is not in buying or selling, but in waiting. And that's the key right now. Alibaba, you have to be patiently waiting for the success of the business to take its turn. And we also got to view it. How does Charlie view the Chinese economy? What does he say about the Chinese economy? So Charlie Munger is still super bullish on the Chinese economy. He understands that the Chinese tech is actually cheaper than the US tech right now. And actually the whole market, the US and Canadian valuations are skyrocketing right now. They're at extreme highs. And actually the Chinese tech companies are undervalued right now. So what are going to provide the better returns moving forward? So guys, we're looking at two major catalysts for Alibaba coming up. And hopefully they do come up. We don't know. But remember, we still have the investor day. What Alibaba going to invest in December 16th, December 17th. That could be a huge catalyst for Alibaba. And then what about an IPO? Is there a future for that for Alibaba? Maybe, maybe not. Who knows? But that could have huge potential for the stock if that does happen. Or we can just wait for the next earnings report. Alibaba recaptures its dominant position and keeps it running. So guys, tell me what you think about Alibaba. Is Alibaba still a buy, a sell, a hold? What are you thinking with Alibaba? Can you please like this video, subscribe to my channel, and I'll get back to you in the next video. Peace!